Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you from the CNBC TV18 Motilal Oswal studios. And we are one day ahead into the week because yesterday was a market holiday, so we're coming out of a longer weekend. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. And what a lovely long weekend, right? I mean, the weather was amazing yesterday, day before. It was so cloudy. Of course, there were rains as well. And then you wake up this morning and you have only 4 days left for the week to end. So you can't ask for anything more, perhaps.
Absolutely. And, one of the last longer weekends that we have in this year, 2023. Then you have Christmas weekend. That's the next long weekend. So good times ahead, guys.
And when you said this year, I just realized that the year has just flown by, right? I mean, we're already at the end of the year. And it's festive season. You get into, Thanksgiving is done. You get into Christmas.
My highlight is the weather is turned now, right? The mornings are nippy and it's not hot anymore. So I think it adds a zing to it. Well, let's just quickly turn and tell you in terms of what you need to know, because we're coming out of a 3-day weekend. Not that it's been hugely eventful in terms of news flow or price action or anything of that sort, but this is what, happened. Just to kind of recap last week, it was absolutely directionless. All of last week was directionless. The Nifty spent most of the week in a 200, 250 odd point range. So very range bound in that particular sense. And if you look at overnight, what happened? So we had half a day of trade on Friday for US, but that was absolutely flat, almost unchanged. So I'm not going to bother with that. Last night, again, it was flattish. I mean, choppy start of the week, you can say. The S&P was down about 0.25%. The Nasdaq on your screen was very, very flattish as well. But this, last night's change not hide what sort of fantastic tidings November has brought for US markets. The S&P is up 9% in the month of November as we wrap out the month now. And the Nasdaq is up 11%. So this is actually one of the best Novembers going back, I think, a year and a half or so for a few of these indices. So it's been great for the US. In terms of data last night, new home sales actually contracted. Actually, prices also fell. And the fall was more than what was expected. So data, especially on the home side, seems to be softening a little bit. The 10-year, on Friday, the 10-year, by the way, had gone up about 6 or 7 basis points. Last night, it came off about 9 basis points. So from the time, effectively for us, the 10-year has moved about 2 basis points. The last close we saw was 4.4. We are at about 4.38. So not very much really to react to in terms of incremental change because you're coming out of a holiday. Oil is near $80 a barrel, so it's steady. I'll come to sort of cues in a bit because there is cue for oil later this week. Gold prices, they hit a 6-month high and they're above the $2,000 per ounce mark now. As I said, events this week, the important ones, you got the OPEC Plus meeting. This was supposed to happen last Sunday. It did not happen, and now it will happen on Thursday. So this is number one. You get core PCE inflation data on Thursday as well. And then there is, Fed Chair Powell's speech, which comes in on Friday. Between now and Friday, there is Powell's speech. There'll be other Fed members who will be speaking. But, the big one, of course, is the Fed Chair himself. I just want to say this. It seems like, and we've been saying this again and again, the narrative has shifted quite substantially. You can see this in the way US markets have performed in the month of November. Markets are worrying less about higher for longer kind of scenario. Instead, they are embracing more dovish outcomes, right? Soft landing and so on and so forth. So the point I'm making is even if data comes in a little hot, it's unlikely that the market is going to worry and sell off in any substantial way. If it does that, more likely than not, participants will use that and look at that as a bit of a dip buying opportunity. Now, just to circle all of this back and look at the market here, as I said, it's been absolutely range bound, but we got to tackle the levels, very near-term levels. Support comes in at about 19,670, which is last week's low, and then at about 19,575, which is the 20-week moving average. So I'm looking at very near-term levels. Resistance, and this is a level we put out last couple of, the whole of last week, comes in at 19,875. It was the recent high that the Nifty had seen, and we've not been able to take that out on the upside. The Nifty Bank, and we kind of have said that the Nifty Bank has been the weaker of the two indices for a while now. Last week, though, it actually ended higher. The weekly close was positive for the Nifty Bank, unlike what it was for the Nifty. So we need to see if, that thesis is changing, that the Nifty Bank wants to actually move higher. And I think we'll need a few more days of the kind of action we've seen last week to prove that. Resistance for the Nifty Bank comes in at the 40-day exponential moving average, which comes in at 43,828. We left off at about 43,770. So this is very, very close by. And support for the Nifty Bank then comes in at 43,567, which is the 20-day moving average on the downside. So as I said, the Nifty Bank, I mean, in terms of by way of price action, needs to prove that the positive close of last week means that it does not want to sell off. It was looking as we entered last week, and it wants to actually go higher. The big cue, I mean, from our perspective, of course, is the state election results. 4 days of trade, and then we get into the weekend, and on Sunday, that is the 3rd of December, we get election results for the 5 states which went to polls. The biggest, I mean, some of the big Hindi heartland states like Madhya Pradesh, there'll be Rajasthan, there'll be Chhattisgarh, Telangana, Mizoram, etc. So that's going to be the really big one, something we will kind of get into and discuss more as the week goes on. Sonia.
Absolutely. So, this week is going to be a volatile one because of all the, cues that we have, right? I mean, whatever little is left of the week, the 4 days of the week, you have the exit polls on Thursday, and then you have the final results on Sunday. So perhaps the market is going to be a little volatile in anticipation of the results that come out on Sunday. In that context, the last couple of days, at least on Friday, it was largely a range-bound day of trade. The flows have also been on the muted side, although there has been strong buying from foreign investors. So we'll come to that in a bit. But before that, I think the broader market outperformance is something that I'm looking at. So while the headline index is absolutely flat, facing resistance at 19,800, it's the broader markets that may continue to outperform. And within that, many pockets, right? Insurance stocks saw big moves on Friday. You had some of the defense names that saw big moves as well. Gold loan companies may come back in focus because of the big move that we've seen in gold lately, like Manappuram, Muthoot, etc. So these are a couple of pockets that may continue to see traction. These are, the larger triggers, of course, are F&O expiry, there's the MSCI rebalance, and there's the state election outcome. So all eyes are going to be on that. But coming back to flows, both FIIs and DIIs bought in the cash markets on Friday. FIIs bought about 2,600 crores and DIIs bought 130 crores or so. Brent crude prices have also cooled off to $80 a barrel ahead of the OPEC meet. So, that's another positive for our own markets. So the GIFT Nifty is suggesting a positive start. But yes, could be a bit volatile as you have large political announcements through the course of the week.
Well, that's right. That's one big trigger, Sonia. And the other trigger, I think, is that there have been so many IPOs that a lot of these mid and small caps, the money has got drained out. Now you will get rejections. Only few will get allotment in IREDA or whether it's, the Tata Tech as well. So that money comes back into the accounts and that can be deployed provided we get a favorable outcome in terms of the state elections. Now, focusing on the headline index, the Nifty Bank, that's showing signs of life. In the last 2 sessions, it's outperformed the Nifty. The Nifty is more or less flattish. The Nifty Bank is up 0.7%. In the last 7 out of 8 sessions, we have gone to around 19,800, but we have failed to decisively conquer that particular level. So if we just pull up the chart on a day-to-day basis, we're visiting that 19,800 odd mark, but that 19,850 to 19,875, that's being a bit of a resistance zone, and that chart comes up for you on the screen. Now, it's a monthly as well as weekly expiry that will play out for the Nifty. That's on this Thursday, the November series, we pull the curtains down on there. So the 19,800 call, 19,800 put as well, that it appears as a short straddle that's taking place out there. What's that? Well, you pocket the premium on the same strike, that's the 19,800 put and the 19,800 call. And on an average, the premium out there is around 200 rupees. So basically, 19,800 plus 200, which will give you a mark of around 20,000, and minus 200, so 19,600. It appears going by this strategy, most traders are bracing for this broad 400-point range. That's a short straddle at around the 19,800 odd mark. But the Nifty Bank, that deserves special mention because that's showing signs of life in the last few sessions. And even if you're looking at the options data, the 43,700 put, 43,800 put, both of them were fairly active. Big open interest build up is what we've seen out there. Which brings us to the level. Since you're seeing writing at those levels, the 20 and the 200 EMA, well, that comes in the vicinity of around that 43,350 to around 43,450. So that becomes a crucial support zone going by the options data and going by the 20 as well as the 200 EMA. While on the upside, the 50 DMA comes in at around the 44,050 odd mark. the bulls will want to get closer to that mark, because then, in fact, you could see a bit of a short covering bounce that plays out. But that's the broad range for the Nifty Bank. You want it to continue to outperform because that helps the Nifty. For today, the Nifty Financial Services Index, well, that plays out, the weekly expiry, so we'll have to keep an eye out on that one. For starters, the Gift Nifty suggests that we start off with the green. We need to build onto that and decisively conquer the 19,800 mark.
Okay, well, before we start, let's tell you what's lined up in the first half hour of the show. We'll get you updates from the markets across the globe. Foo Kin Yap of Standard Chartered Bank will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with Siddharth Khemka of Motilal Oswal Financial Services. But first up on the equities front, Vikas Jain of CLSA says a 32 to 38% rise in small cap and mid cap benchmarks in the year so far is taking them close to a record calendar year outperformance to the Nifty. This has raised the relative valuations of small and mid caps, and further outperformance may not be easy. A notably divergent move in small and large cap banks has taken the valuation premium of small and mid cap banks to big banks to an 8-year high. FIIs and domestic mutual funds are overweight of banks are also near record lows, while CLSA's growth and valuation analysis find banks as the most attractive within the Nifty. Vikas adds that banks remain the biggest overweight in CLSA's India-focused portfolio.
All right, let's get you some money market views now. The rupee, Abhishek Goenka of IFA Global Research says that the rupee has underperformed massively amid recent dollar weakness. While the rupee has been almost unchanged against the dollar, it has weakened about 3 to 4% against the euro, pound and the yuan. He expects the rupee to underperform in overall dollar weakness and outperform during periods of overall dollar strength. This should keep volatility contained. Over the medium term, he expects the currency to trade between 82.7 to 83.7 to the USD.
And on the bonds, Ajay Magnolia of JM Financial says yields are fluctuating in a narrow range influenced by volatility in US Treasuries and oil prices in the absence of any domestic clues. This week, he adds the focus is on GDP data, which is anticipated to be lower than last quarter. He says traders are concerned about the open market operations sales, but find some comfort in the fact that deficit in systemic liquidity may refrain the central bank from any such move. He also says in the absence of any major cues for the day, he expects the 10-year benchmark bond yield to trade in a range of 7.24 to 7.29% for the day.
All right, well, that's views coming through at this point in time.